What's up, everybody? Ian Walsh here, Hard Money Bankers, joined my partner Ryan Walsh, Hard Money Bankers. What's happening?
Yo, happy Monday.
Happy Monday. Ryan's fresh back from Miami.
Can you tell with my very dark tan that I have right now?
Yeah, very dark tan. Looks like it's working out. As we had talked about, we took a little bit of a hiatus because the market was just in cruise control, and the fans weren't here. But we knew that when we reapproached the death line, that the viewership would go back up. So, as stated, the market had to come back down. And I don't know if you remember, right? We were talking that we said that the pivot point of the market, there were so many positions drawn off of that pivot point that it would just, from my prior experience, it comes down and it hammers that. It doesn't usually just like drift into it. So what's happening right now is these lines, and you can see these are trend lines going all the way back to COVID. Every major trend line right now, and we knew this was coming, right? So we said at the end, we expected it last quarter, and then you kind of started to put the pieces together and said, you know what, I think we could start to see this bloodbath in quarter one because things can't be delivered. There's a million reasons right now, a million things up in the air. But as we speak, we have now had a brutal January and no end in sight. We have crossed the free fall line. So I don't know if it's a free for all or a free fall, but I don't know what's below. I don't know. We're stepping into the abyss. So what do you got?
Yeah, so a couple things. It's interesting. I was just, when I was flying to Miami, I was audiobooking the book Psychology of Money, which is recommended by one of our partners, Jason. And the timing of it seems to be pretty well, and that's usually how those things turn out, right? And one of the points was, obviously this guy listened to our show, before he wrote the book. But basically, that people will tune in on the first news of gloom, right? But if things are going well, nobody cares. Nobody listens to it. And that's just how news works. So that's basically why, you said it already, we'll be back. I mean, if you were to take our show from when we last kind of aired, so to speak, what was that, like early December, roughly?
Yeah.
Our story that we're about to talk to, you could just continue the season, right? It's just like a pause, but everything we're about to talk about is just a continuation of it, right? So it's really interesting that all the topics we had mentioned before are still what's happening, and now it looks like they're coming to a head, right? And the impact are about to be felt. So at least it's what we're showing.
We were just a couple months early on the play.
Yep.
So my question though becomes, I still hold to the fact that when you see moves like this, and now that we've hit like the end of times line, I think there's bigger unknown news ahead of us. I don't think it's something we probably know unless you get into a situation where it's like a domino effect. So it's one after the other. So basically, unless you get into a scenario where it's just like, okay, we're Russia and Ukraine are at war. Bang, that's 1,000-point down day. We're like, man, now everybody's used to that. The market starts to recover, and then boom, debt ceiling. Okay, another 1,000-point down day. So unless they start dominoing this thing, which it's not in the real nature, in my opinion, of a market. The market typically has like a big shock and awe scenario first before they start dominoing, which we don't have yet. So right now we're just, the fact that Netflix, fell off a cliff on its own isn't enough to plummet the market. The fact that, nobody's buying boosters and shots anymore because the pharma companies are plummeting, that's not enough. Those aren't shocking events. So my thought as to what's probably happening here is when you see, you have these big crazy days like over here happening, and without news, the longer you go without the shocking event, the bigger the event usually is, meaning because there's more time needed for people to shift their positions. So this could go back up a little bit down, but as long as these huge volatile days and weeks are present, it's a volatile top forming. So like I'd rather have like a few volatile days and then give us some Evergrande news, right? And then try to shock us with Evergrande. That's better because, well, better for a crashing scenario. Whereas if this goes down, we still have no news, nothing that's really convincing us this is what's happening. Then it goes back up and you start to breathe. Then it goes down again. You're still like, what is causing this? Every time it does like one of those waves, that's just a position moving. Maybe it's a weekly a weekly time frame traders or monthly time frame traders that are positioning. That takes more time than the dailies. And they're bigger positions. Those are people that are positioning for 10 years, 5 years, 10 years, 20 years ahead. So the question becomes, what's the news going to be? There's news looming. There's something big looming. We just haven't been told yet. What is it?
I mean, that is what has me on edge here, because, generally speaking, when a certain crowd is aware the market's going, there's a buzzword followed with it, right? And there isn't right now. Everyone's just kind of like staring at their dollar values going down right now.
Yeah, people are like, Bitcoin's crashing. It's like, that's not the buzzword.
Everybody has their own buzzword right now, right? Because maybe you had Netflix stock. You're like, Netflix it's like, no, that's not the same for me. I was in pharma. That's not the same for me. I was in crypto, right? Like, there's no consensus buzzword right now. Because some people, such as ourselves, as lenders, we're watching what the Fed's doing, right? So it's the interest rate, is it the inflation, right? Like, everybody's got their own angle on this right now.
Yeah, Mark Weiser says the pretend and extend is over. I mean, the government has pulled their funding out of the markets. So who's to say this isn't what we're seeing right now? There's the crypto government made their notice on crypto being a real thing.
I want to dive into that a little bit, because you just said that the Fed just announced they released a report. What was that, Thursday at 2 p.m. saying, hey, we acknowledge a digital dollar is possible. Now, they put it out saying we want to see how the public feels about it. So my take on that is we're putting it out there ahead of time so it doesn't look like it's going to be a hostile takeover when we go to the digital currency, but we're going there and we're going to make you think it was your idea.
Yeah. Hey, good idea, guys. You wanted it. Here you go.
Yeah, that's how I see it. And now that that's out, and all of a sudden, like, literally 3:30 p.m. that day is when the red started coming in.
The blood.
The blood, yeah. And I also have another comment from one of my does very well investing, and he said we have not seen 1% drop-offs for 4 days in a row since 2008. Not even COVID did those. I mean, we hit the circuit breaker in COVID, which was huge, but that many days in a row we have not seen it. It looks like this will be day 5. And I also have a comment here from Victoria. What's going on, Victoria? Thanks for commenting. Sadly, we are headed to war. So, I mean, I definitely think that's a possibility. Like, that's on the table, which is crazy. That kind of thing you see when you see real crashes. But it's not a crash yet. Right now, it's still a correction, as people like to say. So I think until it becomes a crash, I think we're not in the war front yet. But the fact that that's a real comment and it's, that's crazy, right? It happens in a week's time. All of a sudden, people are like, we can go to war now.
It's also interesting. So another country going to war, you wonder if the timing of the war isn't like, let's see how much the U.S. can handle. Let's see how much Biden can handle, right? So you go, oh, we'll go to war now because they know something else is coming out in a week or two. That's going to be like, juggle this ball too. It's a good time to make a move. You're going to make a move. Anish, I think I'm sorry if I'm not mispronouncing your name, says way too many analysts. Yeah, I agree. Who knows? Everybody's got their opinion, and everybody's wrong until they're right, and vice versa. So, nobody's really going to know. Economy can't afford it. Yeah, I don't think we've been able to afford it for a long time, but we're going to find out, I think, here. I don't think this is the time. This is a real move. Like, this is a real move here, and it's just starting. And the fact that we're not getting anything to tell us what it's about is.
Give us our headline.
We need a headline, and if they're not giving us a headline, it's because you're holding it back, because you're repositioning money. Because they would drop the headline when they're in position. Everything's in position. Everybody's protected. Okay, let them know. But if you're not in position and you're still positioning, this could be weeks of like an up and down game of like, all right, let's rally on this, take, switch some more positions, rally on that, switch some more positions, and then finally let's drop the bomb. What not literally. Hopefully.
Well, hopefully not literally. Yeah.
Yeah, I mean the common thing though, I used to follow this guy that was kind of a wacky guy on one of the forums that I trade on, and he was wild, but he had a really good point, and he would swear, I guarantee if I would look him up right now, he would swear this is all Wall Street predetermined. They're going to run it down January, February, probably even March, just so they can ring it back up April, May, and then, sell in May, go away, or vacation in May. So he would swear by it, and I guarantee he's probably putting millions on that idea. And he called it during COVID. I give him that. He called COVID like really well. He was like in the face of everything. He was like, "You're all idiots. Like this is going back up." So,
yeah, I mean, I do think something that is a little bit interesting is you do have to account for the circuit breaker. Like, because if you look at this, it's moved about 7% over the course of a week.
Yeah.
Right. So like, it's almost like they can't just drop it in one day anymore. They have to
and they know that.
They know that, right? So they got to like space it out. So they're holding on the news, I think, as well. There's news out there.
We've had no limit downs and no limit ups, but some very close. Plus a limit down or limit up. I forget what the exact number is, but back at 18, when you were at Dow 20,000, that's 2,000 points, right? Or let's say it's a 1% move. We're at a 3,300 point move, so you have more space to also move in that with that percentage limit. Is the credit bubble finally bursting? I don't know, man.
I think it's one of the things. Exactly. That's one of the angles we're seeing. We've talked about all the different storms, which Ian has written there, and I think you can pull the headline from any one of them and then just be like, all right, this is what we're going to go with, right? But they haven't picked yet.
I don't think it's any of these. I don't think any of these become the reason. I think what'll happen is they could individually become mini justifications to move it up and down for a little bit. And then I think there's something though, there's always like the catalyst, the straw that breaks the back. And that one has to be more shock than any of these because everybody knows about all these. Like everybody already knows about it. So I think you could have some up and downs, and I think whatever is going to happen at least through May. And I don't know. This is like the big line, though. I mean, you can see that chart. Those are all the major trend lines since COVID, and every single one of them. I only drew one straight across because I was like looking for maybe here, maybe just this line right here. This is a maybe line. This is a horizontal support and resistance. This isn't like the momentum. So the trend lines represent the momentum of the market, horizontal momentum, or I'm sorry, diagonal momentum. Whereas like horizontal support and resistance really are just, there's it's not trapping the momentum. Yeah. So it's where you lose momentum. So now as we go down, every time you break, one of the bigger, if we wanted to like really kind of get into the technical analysis of it. So if you break like this, what we're looking really for right now is like a flip of support and resistance, meaning support turns resistance, meaning, so these are like support lines here. So there's positions at these lines here. So we call it, the last time we saw this, we call it the kiss of death against the trend lines. The same thing holds true for horizontal. So as we approach these lines right here, I mean, there's a lot of support in this area, a lot. You're at least going to get a bounce in here, and everybody's going to take their hands off the wheel. We might as well just wait until the bounce stops before we do another show. But everybody's going to take their hands off the wheel right in here, which is what we're coming up to. And then the question is going to be, do you put in a green bar that then gets smashed by a red bar? And do they flip support and resistance, meaning the current support becomes resistance? When that happens, that means the bulls have become bears and in that position. So these are your major fall off points. Any one of them is valid in terms of what it could go to. The question is just which one does it want to go to? And your guess is as good as mine because we are in that free fall territory.
So I think a lot of people that do tune in and watch us, Ian, we're lenders, right? We're private lenders. So it's money we care about. How does this impact your underwriting right now?
It's fast right now. So I would just say I'm conservative. I've been conservative, like extra conservative since basically like during our show, September, October, November. I've been extra conservative.
Yep.
So how does it affect my underwriting? Not, it doesn't. I don't know. I think we're going to really know more like March, April, May as to how the real estate and housing market's going to really fuel this. And Mark says, what happens if Bitcoin goes to $1? Mark, I suggest you buy. I'm just throwing it out there. Not investment advice, but if it's at $1, I will be buying. I'll be buying quite a bit of it as it goes down to 0.5, right? So,
yeah.
But I don't know. Underwriting wise, it's too fast for the real estate market to feel it. I do know, though, that, with interest rates going up, it means you're going to have more actives on the market, less buying potential, things like that happen. And if you just stack on top of it some other crazy news, which is certainly possible, then, here's where we are.
Yeah, I mean, not that we're lucky because we're not out of the woods yet. Like, it still could be a real estate thing. But in 2008, the crash was real estate. So, like, your underwriting was almost immediate. Real estate generally lags behind, right? So you'll have a little bit more time to adjust to whatever's going on. Hopefully that's the case.
Kind of. I think what you're going to see now is so as the market starts to go nuts, you start to get all the Facebook posts that goes flee to safety, go to real estate markets crashing, put your money in real estate.
Right.
So we're going to get those for a few months. So you're going to see those posts pretty frequently, like, can't deal with the stock market, and the stock market goes back up and nobody's talking about it again, right? Like that's the way it goes. Just like Bitcoin. As soon as Bitcoin, right now I'm already seeing like I told you guys not to buy Bitcoin posts. You shouldn't have bought Bitcoin posts. I'm seeing all those right now, so that's a good time to buy. And right. So, we just haven't seen that yet. We need to see the flee the stock market posts. And then all of a sudden you'll kind of get, you'll get a little bit of relief in the market. But right now, real estate hasn't even felt this. Real estate has no idea. The real estate spring market will be the one to tell us, though, because everybody expects a spring market to be roaring. And when you don't have a spring market that's roaring, you go, and then realtors, aren't eating as well and, stuff like that. So we're not there yet.
Especially if there's an interest rate, because there hasn't been a hike yet. There's only been talk about it, right? So banks have adjusted their numbers saying, well, there's going to be rate increases, but the rate increases haven't even happened yet, right? It's all just kind of excuses for them to make more money, in my opinion. Which is
this is what we talked about last quarter. We said it's going to be just one bad news after the next, right?
Yeah.
Polar vortex, isn't that next? We're getting our polar vortex and like supply chain. And, I just saw a post yesterday about, I guess Biden told everybody, don't worry, the shelves are stocked. And then there was some post that came out from some national security warning saying only buy what you need. And saying, so it could be anything. It could be all of them. It could be all of them. But there's going to be one that everybody has to go home and talk about. You can't leave the dinner table open with everybody talking about a different story. Everybody has to use one story.
Yeah, it's very, very fascinating, right? Because our story as lenders is we're watching the interest rates, right? We're watching the inflation. And then you got other people, supply chain, that kind of stuff. Polar vortex, right? It's wild right now. But
you need the one doom and gloom thing to bring everybody together as one
right.
You need like everybody talked about. I'm so glad we're done talking about COVID. We're still it's still kind of out there. I'm so tired. I was like, I think we talked about this years ago or when COVID first started. It was like, this isn't over until everybody is so sick of the word. Like that was how real estate went in 2008 when it collapsed. People did not want to hear the word real estate. Like it was just like, I don't even want to talk about real estate. Like that was the momentum of like, all right, that's the bottom. I feel like we're there with COVID now. I feel like it's at that, and you're finally getting on all of a sudden on CBS and NBC and stuff like that. You're getting all these documentaries about remember the pandemic. Thank God we're through the pandemic. Like you're getting these weird documentaries coming out, basically saying, all right, we're telling you now that that it's over. We're declaring to you that it's over. So all these stories are coming out like as if it was like 50 years ago. It was like, dude, everybody's sick of it. So you need something else to talk about. And, Super Bowl is coming up, but that'll be over pretty soon. Some good games there, but that won't be enough to keep the economy up. So,
yep. All right. So what's the message of the day then? Everybody stay tuned to news for now.
It's going to be the blood. The blood is the cut was just opened, so it wasn't. This isn't a one and done thing. It could take those several waves, several pulls. This isn't like a straight down scenario. This I think we're going to see our real first down pivot in the market. And I mean when I say down pivot, I mean I should choose a better chart. But let me see.
I mean, you can just see how sideways that. What's the duration of this chart that we currently see? Is this like 1 year?
Well, I started back that you can see now. Yeah, probably about a year.
I mean, it's just sideways, right?
Yeah, if you look at it like that, sure. Yeah. But I think you're going to see like a real pivot like this happen where it comes down here. And then like over here, you'll see this. It'll go up and then back down. And then I think, everybody's ears will really be, I think we'll have whatever the news is by like Dow 30,000. I think that's probable. We'll know what the new buzzword is. But I don't think Dow, I don't, this move has more than Dow 30,000 written all over it. So I think it could take months. I think we're about to be in a at least multi-month bear situation.
Yeah. I mean, my personal take is, that this is very speculative, but, with the Fed pumping money to get us out of COVID, with lowering interest rates, like it had to come to some sort of consequence at some point. And that might just be one of the things that we're seeing, come to fruition here. So
yeah,
we'll see. We might be feeling COVID now in terms of the economy.
That's fair. Yeah, that's fair. The lag of COVID, so to say. Sure.
Yeah. Alrighty.
All right. Sounds good. See you guys.
Stay tuned.